Hi, everyone. Welcome to the 121st episode of the Timing Research Show for January 17th, 2017. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 173rd weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any past report there. I have Dean Jenkins back to moderate today, so I'm going to go ahead and turn it over to him.
Okay, well, thank you, David. Thanks for having me back. I always enjoy this show. I enjoy doing it. It's a great audience, and there's always some really interesting and experienced panelists here. So today on the panel, we've got Fausto Pugliese of Cyber Trading University, Simon Klein of TradeSmart Forex, Jason Allen Jankovsky of the Lion Online, and Stefanie Kammerman of the Stock Whisperer. So just as a way to get started, I'd like to have each of the panelists, each guest, themselves, and talk just a little bit about your service, your site, and what you do. So we'll kick it off with you. We'll keep that order through the show here. So Fausto, if we tell us what you got going on, man.
Hey, Dean, thanks for having me again. It's always a pleasure to be on the show. In Timing Research, I think the last time we were on was about a month ago, something like that. We're talking about it with the market. So for everyone, if you don't know who Cyber Trading University is, I've been in business for over, it's like a 22nd year. Started on one of the original day traders, Souls Bandits, that started. It was about 1,000 of us. Now there's, which you could see, over about 10 million people around the world doing it. And basically just love what I do. I run a professional trading room. We run a professional school. We have a huge staff here at Cyber Trading University with other instructors and staff that work side by side, doing coachings and one-on-one coachings and trading with students and so on. And it's been quite fun. So we do a little bit of both. I trade with my students, and then we teach more in the off times. And if you guys want to know a little bit more about what actual real day trading is about, just we'll tell you a little bit at the end of the presentation how you can come and sign in and see why we've been in business for 22 years.
Yeah, it must be something if you're still around, right?
Well, there's a lot of new people that always come in. It's always great that there's education is a very important, essential part of trading, and there's always new people that are always coming into the industry, which is great, and we always recommend you should go out there and learn a little bit from everyone. Learn something. So you always get different perspectives of people's styles and stuff like that. But yeah, it's been a fun 22 years, and it's just great to see the industry growing bigger and bigger.
Very good. Good to have you here. I think I've been on with you before and always enjoy it. So Simon, if you'd introduce yourself and tell us about your service and what you got going.
Hi, Dean, and everybody else who's watching the show. It's a pleasure to be here again. It's my second time. I was on last time with Fausto as well. I have a site, TradesmartForex.com and TradeSmart, and we're in the business of educating traders how to firstly read the market, and then to be able to build a framework to be able to run a successful trading business, and to enable them to develop their own style and own approach to the market within that framework. So that's what our strengths are. We don't teach one particular style, even though I'm very much into price action trading and reading the charts, the naked chart, so to say, without any indicators. So we'll take a trader from the beginning, from knowing nothing about the charts or reading the markets, and then teach them how to read the markets with confidence so they know what the odds are, what's happening in the markets, and then enable them to develop their own strategy that fits their own personality and lifestyle, and help them go through every step of the process and mentor them on the way to become a successful trader.
All right, thanks, Simon. And anybody that shows up with a British accent and good diction, automatically commands respect.
Thanks, Dean.
Good to have you here. I look forward to our discussion here. Jason, if you'd introduce yourself and your service, that'd be great.
Sure. First of all, thanks for having me today. This is my first show with this particular group of broadcasters, and I'm really very pleased to hear that we're all on the same page when it comes to education and training. That's what I do as well. When I have an opportunity to mentor and coach other traders. I've been trading for over 30 years and have had my share of ups and downs in the marketplace. And what I do now is I focus on foreign currencies as my main source of opportunity in the market. And I focus more so on trade psychology and trader psychology than anything else. And currently, right now, I'm not soliciting for new clients or providing daily education, coaching, trading advice, and help to traders. I'm focusing on my own accounts at this point, and I'm preparing to write another book. I have 3 books published now by Wiley and Sons. And David has asked me to be a commenter on Timing Research regularly, and I've been with him for, I think, 4 or 5 years, I think, off and on over the time. And this is my first chance to listen to the current group gathering of commentators that you have. I'm really looking forward to this particular show. But what I do right now is focus on my own personal trading approach, and I focus on psychology more than anything else. I think that's really the key element to this business, is mastering your own psychology. And that is where I spend 99% of my time. So a lot of what we're going to talk about today, I'm going to look at this from a point of view like I always do, which is, what is the loser thinking? What is the winner thinking? And what are they likely to do next?
All right, that'll be really, really interesting. And I don't think I've been on with you before, Jason.
No, Dean, your first time you've been the host. Yeah, thanks.
Yeah, so good to meet you, and I'm looking forward to your comments. I mean, who doesn't want to hear from the Lion?
The Lion of LaSalle Street, ladies and gentlemen.
Man.
Give it up for the big cat.
Yeah, nice. Okay, and last on our list, but certainly not least, is Stefanie. And if you'd introduce yourself, Stefanie, it'd be awesome.
Sure. Thank you so much, Dean. Wow, what a great group here. Thanks for having me on. I'm back again here, and I love the psychology. In fact, I majored in psychology, but had really no desire to be a clinical psychologist. I was drawn to the stock market. So in 1994, I started out as the largest prop room, largest trading room, Schoenfeld Securities. Now, my expertise is the dark pool. The dark pool has been around since the beginning of time. In fact, most people think you can't see the dark pool. And I run an online trading room, and I've been teaching traders about the dark pool for 23 years now. In fact, I've spotted the last 11 corrections before they happened and posted them up on social media. So I've gotten quite a following on social media. I have about 35,000 followers on StockTwits. And everybody wants to learn about the dark pool. So I started an online trading room 4 years ago that focuses only on the dark pool. These are the guys that are moving the market. This is Barclays. They're trading in the pool. 40%, actually higher, of all the trades being done right now are being done in the pool. And when I share my screen in just a little bit, when we get to that part, I'm going to actually show you real live dark pool prints that are coming in today. And I'm going to show you how to use them to trade the SPY moving forward this week. But I educate traders how to trade stocks, options, futures, Forex. We do short-term day trading. We do overnight swing trading. I do longer-term trading. I trade live every single day in my room. In fact, right now, I'm actually in the middle of a trade. I've been short Morgan Stanley after spotting huge dark pool selling on the financial stocks over the past couple of days of trading. So I can show you what that looks like, when we share the screen and all. But I absolutely love what I do. And I have hundreds of traders that are in my live trading room with me every single day trading live. It's a great place to learn.
All right, thanks, Stefanie, and good to be here on the show with you the first time. I look forward to seeing your charts and comments on the market as we move into this next stage in a second, where we actually talk about the market. And if I'm going to talk about the market, I want a chart in front of me.
Right.
So I'm Dean Jenkins. I'm the founder of FollowMeTrades.com. I started as a trader. I've been trading about 20 years. I started as a fundamental trader. Had an MBA and started analyzing all this fundamental data and was totally frustrated about why that didn't work, right? Why good companies with good fundamentals didn't go up and why bad companies didn't go down. and eventually became a technical trader, and I've had much more success at that. Again, I started as an individual trader, and talking in different trading rooms and meeting other folks, and I was having pretty good success. And people go, "Hey, Dean, would you share your trades with us?" And so I kicked off an advisory service, and I share my trades that way. And then every time I get so many questions about, well, why are you doing that? How do you do that? How do you pick them? I group the questions together and go write a course. So I've got a handful of courses now that I teach, and I run a live trading room, an hour and a half right across the open, and we look at forecasting the market and some trade ideas. I like trading stocks and options primarily, and I call out trades on some 10 to 60 minute charts, a little bit shorter term, maybe a day to a week, and then some longer term picks, 4 to 6 weeks off of daily charts. And so that's what I do. And again, followmetrades.com. You can check out the website there. It's good to be here again. Let's jump right in now. This is what everybody's waiting for. What's going to happen in the market, right? There's a ton going on. All kinds of crazy stuff. We had the election. We had the Trump bump. Now we're wondering, is there going to be a Trump dump? Is it gonna go down, right? Stefanie, you mentioned banks. I've been watching the big banks, right? They all ran up so much, right? Is there going to be at least a short-term correction to those? I'm watching really close. But we got the inauguration coming up at the end of this week. There's going to be a bunch of demonstrations and chaos around that. So, what's this all mean in the market? I'm excited to hear what the panelists think, and so we're just going to go through that. And so the first question here is we're going to ask is, what direction do you think the S&P 500 index is going to go from today's open, or today is Tuesday, till Friday's close, the end of this week? Is it going up or down? And the survey said, the respondents to David's timing research survey, 69.2% said it's going higher, 30.8% said it's going lower. So let's see if our panelists agree with that, or what your opinion is. I'll ask you first your direction. You think it's going up or down, and what your confidence is, and then we'll come back in another round and ask why, and that would be a chance to share charts if you want to show some kind of analysis on a chart for that. Our order here, and Fausto, what do you think, man? Up or down, and what's your confidence on that?
Dean, I have one important question I have to ask you. Regarding about 69% of people said high and 30% are low, is that Republicans or Democrats? Or is that just the general public that people think, So anyway, if you remember, we were back here in November, and we were actually we were talking about the Trump effect, and I was actually with my traders at 3 o'clock in the morning, trading with them regarding when Trump got elected, because there was a huge correction, if you saw in the S&P market, when the market just crashed about 1,000 points. But obviously, there's been you could see a lot of the high frequency trades that were going on, which that's one of the big things I specialize in. Market was tanking, and but sure enough, it came right back down after being down about 1,000 points, the Dow. And regarding about as a day trader looking at it, listen, it's more and more people not getting political. If you're a Republican or a Democrat, we're all in the same business. We're all traders. So we're here at Cybertrade University. We're just focusing on the Trump effect. Anything that comes out of this guy's mouth is dollars in our pockets. And and then now he's going after pharmaceutical stock companies, and you saw the car effect, that what he did with all the car companies, and now they're jumping aboard, and a lot of them have taken off. But regarding about how to trade the S&P futures, listen, in my opinion, I think you're going to be stagnant, probably going to be going down a little bit. Let's more until he starts hitting some big companies. And the ones that are on the Dow, I think the S&P probably is going to go down a little bit. I think eventually it's going to go a lot higher. But as a day trader, I mean, we're starting to trend. We're breaking lower lows. We have something that we teach, which is called one of our indicators that we teach is called an FF flag, a Fausto flag, and it's starting to trend down a lot. And we'll see what happens when it gets down to 19,000 on the Dow, 19,800. But right now, I don't think you're going to go anywhere. I think you're going to be stagnant until probably the next week or two.
All right. So are you calling out neutral, no change, or up or down for this week?
I'm calling neutral. Probably a little bit more on the downtrend right now. Probably lower, I would say, As everybody think it's going high. Overall, you're asking me a question regarding from January 17th to January 20th. So if you're talking about within those days, I'm saying lower. So I'm going to be part of that 30%.
Okay, what's your confidence on that?
Come see me tomorrow. Every day's a new day, But as of right now, what's going on? Definitely a little bit. It's been trending on the downside.
Okay, so you don't have a confidence number on that for this week?
69.30.
Okay, all right, 70%. Got it. All right, Simon, what direction do you think this week, and what's your confidence on that?
Well, hi, Dean. Yeah, like Fausto just said, there's actually 3 directions markets can go in. They can go up, down, or sideways. So at the moment, the market's moving sideways. So I think it looks likely to continue moving sideways until it either breaks over the highs or goes below the current lows of the past number of days. So that would be the way I would approach it. So if it goes above the highs and stays up there, then it'll probably continue going higher. At the moment, it's moving in a tight range. So how is it going to close? Is the bar on the weekly chart going to be red or green at the end of the week? I don't know. At the moment, it could go either way. So I would say confidence-wise, 50-50, if it's just going to change into a green bar at the end of the week or not, stay red like it is at the moment.
Okay, so 50-50. I was just looking, I do a market update newsletter, and I was pointing out the Dow daily chart from December 13th through last Friday's close, right? What an incredibly tight range. It's going absolutely nowhere, just sideways. So not surprising that I'm having trouble pulling a commitment out of you guys on a direction right now.
Yeah, we picked an exciting market.
I'll tell you this, when it goes, it's going to go, right? But picking that direction is a little bit hard. Jason, are you going to make a commitment here, man? Are you going to break the trend?
Absolutely. I'm going to make a commitment. I have to say one thing I think is really I admire Simon's honesty. When if you put 100 traders in a room, you get 100 different ideas. But we can't make any money unless we back whatever opinion we've got with an actual open market position. And when you're unsure of price action or price direction, when you're unsure, it tends to cause you to sit back a little bit and wait for more data, more information. And that is a psychological issue that everybody has. That's not just traders, that's everybody. And I think the way that plays out in the market is you get sideways price action. So I think the market is saying right now, there's a lot of wait and see being built into current prices. One of the things that I found really interesting, if you go back and look at a lot of Dave's history on the Timing Research survey, you'll see that it rarely gets to the point where you've got a 70-30 commitment one way or the other. That's rare. Usually, all the people he interviews, you get about a 50-50 split with maybe going 60-40 once in a while. You know what I mean? It's really a very tight thought process that most traders are working on. And this week, they're coming out very aggressive on the bull side. And my point of view would be being that bullish with a huge market unknown and fundamental coming up at the end of the week. I really think that this is a perfect case of buy the rumor, sell the fact being developed right now. And I'm bearish. I would be looking to see lower prices on the S&P at the end of the week. I think we'll close lower. Okay,
so there's a commit. What's your down? What's your confidence on that, Jason?
I think it's really difficult to. I don't even want to use the word predict, but to say in advance where prices are likely to move to.
Mm-hmm.
You can't really go more than about 3 days out with any degree of confidence. It's Tuesday. We're talking about something Friday. Really big money usually tends to move within 48 hours of something. So, we're still a day away from really seeing any large commitments one way or the other by professionals that aren't already committed, So I would have to say that my thinking process is pretty clear. I would be selling any strength in the S&P. And I would look for lower action by Friday. I think we'll close lower on Friday for the week. how strong is that right now? I'd say I'm about 70%. I'd say if you could ask me the same question Thursday morning, I'd be closer to 100%. So I'm well above 50-50. You know, I'm ready to put some money on the short side. So I would say it's really a stronger potential to the downside. I can give you more of what I think about that when we get to the reasons behind it. But for right now, I'd say if you ask me, what do I think? I really think the probability is lower. And I think the probability of that happening is really high. So I'd be 70-80% today, maybe more tomorrow.
Okay, thanks. And as you talked about, you know, uncertainty and maybe being on the sideline, it made me think of I've got a couple airplane pilots in my trading room, and we've refined a mantra that we use, and that is, you know, if you're not sure, it's okay to sit trades out, right? A mistake,
yeah, absolutely, yeah.
A mistake, you know, newer traders or undisciplined traders make is just feel like you got to go be in a trade, you got to pull the trigger, and it's okay to sit them out. And so our saying evolved from a pilot saying, which is pilots say, you know what, I'd rather be on the ground wishing I was in the sky than be in the sky wishing I was on the ground.
Right, yeah. I can't tell you how many times I've had that same issue where, like, I was absolutely confident on something, and I would have rather waited a day before I put a position on. Yeah. You know, so I can understand that completely. And I'm a pilot myself, so I understand the whole concept of making sure that the risk you take is worth taking, because you don't want to lose your life over something. But you know, bet not thy whole wad. You know, I wouldn't be short. I wouldn't plunge this weekend. You know, coming up this weekend, I would have something on, but I wouldn't put my whole account equity on it. No way.
Right. Okay, Stefanie, the stock whisperer, whisper to us. What's coming, Stefanie?
All right, can you see my screen?
Yeah, we're gonna go through the reasons in the next round. So if you just want to point something out quick, but just give us your direction and confidence right now. Okay. I love it though. I love having charts up when we talk about stuff.
Yeah, seeing the charts and seeing the dark pool, so which I'll show you. But you know, when you think, you're putting yourself into the trade. All right, and that's the worst thing you could do, is think about where you think the market should go. You know, so I really try not to think, because every time I do, I lose money. I don't know about you guys, but when you think, just follow the dark pool. I wanted to show you an example on my chart. Just by following, the dark pool was buying way before the election. So it's not the Trump rally. Trump did not make this market go up. The dark pool did. They were buying on November 4th and hiding their buy prints until November 7th. And that's why the market went up. Whenever I see this happening, we always go up. And when does the market stop going up? When we see them selling. So I have levels. So today's level is 227.01 on the SPY. That's where the dark pool was selling, whether it was, I think, 3 hours ago. Actually, I think it was, we didn't trade there today. They were selling there on Friday at 227.01. And I'll show you that in the next segment. But they were selling there on Friday and not reporting those trades until today. If I see 20 million of those shares by the end of the day, I'm going to become more and more bearish. Now, what happens a lot with news stories is we may have an upthrust occur where they move the market up pretty rapidly, and then the sellers come in at the top. They break through a major resistance. The sellers come in, and we get that wick at the top. And that happens when the Fed speaks a lot. And that's when I personally like to put a short position on. So it's good if you have all long positions in your account to put some protection on going into this event. That's what options are really great. They're really cheap. You can buy some really cheap puts right now. But as far as, you know, trying to trade into this big news event, I think that that's going to be very high risk, you know. So I haven't been trying to guess where the entire market is going, because money flow is changing from sector to sector to sector. I'm pretty much just trading stocks where the earnings just came out. So we were trading Bank of America on Friday, trading Wells Fargo, trading gold. I mean, those are your safest place to trade, rather than trying to guess where the entire market is going. Nobody knows that. You could take a guess, you could be right, you could be wrong. But if you follow specific levels, so if the SPY closes above 227 today, I'm going to turn a little bit more bullish. If it closes below it, or tomorrow closes below this dark pool level that I'm just getting in today, then I will turn more bearish. So, you know, look, 50-50 where the market could go between now and the inauguration. But after that, you know, after Friday afternoon, if we get an upthrust, a high volume Wyckoff upthrust on the market, I will completely short the market heavy. It really depends on the price action that comes in. So I'll be honest, I don't really have an answer for you as far as where the market is. But if I see them selling heavily, I will take pictures and tweet it out and say, hey, bearish below this level or bullish above it.
Okay, 50-50, still waiting. And that's like basically three of you said that, and Jason's taken a firm position. And I'm going to take a firm position here. I keyed off of something you said, Stefanie, and that's about, you know, I think you said, I don't think, right? No. I think that's super important. I agree with that. You know, I do try to think. I try to use my brain in my trading, right? But I try to ignore what I think the market should do and pay attention to the realities, right? Price and volume are the only realities in the market, right? Everything else is speculation, but, you know, exactly. A certain number of shares sold for a certain price, and that's a reality, and it's indisputable. And the patterns formed from that are a reality as well. So I try to trade based on what the market is doing, not what I think it should be
right.
doing.
I think about what I'm going to have for lunch today. That's what I'm going to think about. That's the most important thing. As far as trading, it's all levels. It's all just mathematics. High probability. It's just all numbers.
Yeah.
But
so the reality of the charts, in my interpretation with the tools I use right now, I think somebody else touched on it. We are getting a series of lower lows, lower highs, lower lows, right, at the end of a pretty big rally. So I think we have a pattern based on reality and my analysis techniques that I think we're going lower. I think there's a technical case using my indicators for the market to go lower, and I'll show that on my charts. And I give that about a 70% probability. And I also, you know, this is more subjective, but any new information that comes out between now and the end of the week, right? I can't conceive of likely information that's going to move the market up in a dramatic way. I can conceive of information that would move it down pretty dramatically. That's speculative. I'm basing my analysis on the realities of the chart, and I think those are showing it going down.
Can I ask you a question?
Nope.
Yeah, no, really. Can I ask you a question? Just based on what you said. Okay, so you're bearish, and I understand. I am bearish right now because we're below certain levels. But what is that level for you, Dean?
I'll show you on the chart.
When are you going to turn bullish?
I'll show you on
that level. Okay, but what would that level be, right? Where you say, you know what? I'm not bearish.
Yep. So when we in this round that we are now entering, I'll share a chart and I'll show those exact levels.
Oh, fantastic.
Absolutely. Yeah. So Fausto, this is where we come back and really dig into, you know, your reason. What's your rationale for your direction or lack of direction? Just maybe expand on that a little bit.
My lack of the direction on what the S&P would do.
Yeah.
Well, I mean, you know, getting back to what your results are, you know, regarding about the high frequency trades, which I know, you know, some of you, I've done some of these events with you, and I kind of showed you many times of watching the high frequency trades. You know, every stock is a case by case basis. You know, and every day is a new day. What's going to happen? But you know, like I told you earlier, and you know, going back, I think we've been, you know, I've been here several times. We talked about the Trump effect. That you know, people are all ears. I mean, the high-tech companies are petrified, waking up at 3 o'clock in the morning, making sure they're not going to have a crosshairs on them. You know, it's a dominoes effect. So, you know, I've been doing this since 1995. I actually helped NASDAQ build a lot of the dark pools and the high frequency trades with the ECNs when it came out. So I know a lot about how they work and how they actually function when it comes to seeing those high frequency trades. But once again, that is a case by case basis on certain stocks. It doesn't trickle down to the whole market. you will see it if it all affects, but you better keep a close eye on this guy, on regarding whatever the president-elect is going to do, because as he kind of points out and talks about certain things about certain industries, the market will be affected by it. So like I told you, we got the Trump effect. We got about 2,000 points that we inherited from it. I think that's all been factored in. Until we get somebody that's going to have crosshairs on them, you'll probably see a little bit of a down. But overall, when he starts implementing the tax situation going on, the corporate tax and everything, and people start buying into and start reinvesting in the United States, a lot of these companies on the short term are going to take a little bit of a hit. But I think long term, you could see a lot higher of a Dow and an S&P.
All right. And Simon, what about you? If you'd like to elaborate a little bit on your thinking, what you're looking at, indicators, information for your 50-50 forecast.
50-50, yeah. Okay, Dean, what Stefanie said was a very important point. You have to wait for that shakeout move where the market generally pulls everyone in one direction, and then when all the I guess the novice traders getting in the other direction, who's on the other side of those trades? Those big guys, the big boys, so to say, yeah. And they're taking the other side. So you see sometimes the market whips out, it breaks out and then it comes back in, snaps in, and that's the start of the move down, or likewise the other way around. Like over here, for example, you see this move here. It wanted to go higher, so the market moved down. You can see my screen, everyone. The market moved down and then it came all the way back up again. So sometimes to go higher, the market has to pull back, especially when it's in a tight range. And you can see at the moment, if you look on we'll make this bigger actually. It's a daily chart. We're just in a very tight range here.
Yeah, we are in a very tight range.
Yeah, so to say, what direction it's going to go, that's, I mean, I don't know. I'll trade whatever it does. And that's another very, very important point. Most people out there in the world have this false belief, and they base their trading on their belief system. And the belief is this: most people believe you need to know where the market is going to go to make money trading. That's not true. You don't need to know where the market is going to go to make money trading, because we don't have any control over the market. We have to know, what are we going to do if the market does something that we recognize our edge in the market? When we recognize the market does something, which is our edge, then what are we going to do? And if that changes, what are we going to do? It's a very fluid thing. It's not set in stone. We're set in stone. The market's fluid. So we always have to know, if the market does this, what are we going to do? If the market does something else, what are we going to do? And sometimes the best action is no actions, to stand aside, as you said. It's better to sometimes be standing on the sideline, than rather be in a trade that you shouldn't be in. So
yeah, that could be the most profitable trade you take, right? Is the no trade.
Yeah, well, if you take a look at as a developing trader, so when I'm mentoring my traders, if you actually eliminate some of the mistakes, and you might be left with being a profitable trader. So in your development as a trader, all it might be is to eliminate those mistakes that you're making, or those trades that you shouldn't have taken. If you eliminate them, you can go through your trading log and actually have a look and eliminate all the trades that you wish you shouldn't have taken, you wish you didn't take. You might find that you're actually profitable. So then all you have to do is recognize those scenarios in the market that you shouldn't trade, and don't trade them. This is one of those scenarios at the moment. Well, I don't trade in a market that looks like this at the moment. There are better things to trade, like gold, for example, and markets that are actually trending at the moment are moving. This is moving sideways. If you look at the market, I mean, we've had a nice move up. I'm looking at the E-mini futures actually to look at the S&P 500, and so you see we've had some sideways action over here. We've had a nice trend up, and at the moment we just moved up and we're at all-time highs pretty much, or around about, and going sideways. So where are we going to go from here? Well, if the market's going to go down from here, well, it could just go down. It could shoot up and pull back, as Stefanie was saying before, and then start the move down. But at the moment, we're still trending up on the monthly chart, and, the trend's up. So, that has to change for us to start moving down. At the
All
moment, you know, we're
Yeah.
after a big move up, moving sideways, and not much
Yeah.
to talk about really.
Right. Okay. Jason, you came out with a strong opinion, so if you want to elaborate on that a little bit more, it'd be awesome.
Sure. Well, I just wanted to say that what Simon just said really resonates with me. He said that people make the mistake of thinking they need to know what the market's going to do in order to profit. And that comes from a psychological need. That has nothing to do with making money. You know, if we were to have the conversation I would love to have, if we had the time to have that, I can show you conclusively, absolutely fact, that if you had no system and no information, period, and flipped a coin, you would outperform most people in this business. And part of the reason behind that is because the market itself is only moving because of the orders that are put behind the price. The only reason the market moves higher in price is because the buy orders are larger than the sell orders at that particular moment. That can happen. That's why a market can keep making new highs day after day, week after week, week after week. And it, from a technical standpoint, it looks like this massive trend, and it's breaking out to upside and all the rest, and there's no volume behind it. It just so happens that every order that comes in is 10 or 15 or 20 contracts slightly larger than the offers, and the market just keeps ticking into the looking for where the volume is. And I think that's what's happening in our stock market. You know, if you look at, you know, when Barack Obama took office, we were trading, well, within a few points, not at the highs, but the 2000 highs, but almost at the record highs. And when it became apparent he was going to win, the market took a dump. It lost half its value. That's because everybody was long. It didn't have anything to do with the fundamentals. It had to do with everybody was so convinced that there was brand new, fresh lifetime highs coming. They chose to believe that whatever the fundamental event was, in this case, a new president with quote unquote new ideas, but anybody who studied history will tell you that nothing that guy brought to the table was anything new. And basically, no one was left to buy. And then, of course, you had a correction, and that caused the losers to quit. And then once it went past a certain number, a larger group turned bearish. And then when it went past a certain number, an even larger group turned bearish. So it had nothing to do with the fundamentals, whether or not policies and procedures and tax cuts and changes and redistribution of wealth, whatever it is, none of that really matters. What matters is whether or not people believe it's going to affect their pocketbook and how they think it's going to make a difference to them personally, and that's what they trade on. And that issue is no different today. It'll never be any different. And in my opinion, it's exactly the setup that you have right now. You're at all-time highs with this brand new fluff of a new president that there's enough about Donald Trump as our president that causes a degree of uncertainty, just like Obama there was enough about him as our new president that caused a degree of uncertainty. There's enough about Trump that is doing the same thing. It may be just a different kind of flavor for different reasons. But the fact of the matter is, if there is enough people long already thinking that this market's on its way to 21,000 in the Dow before his first 100 days are up, who's selling to them? And where's the volume? And from my personal experience and from watching how other people trade and watching things like bullish consensus and the news, got in the background, I have on CNBC today, they just had a news flash across the screen that said that interest in Obamacare has never been higher. It's like at the highest it's ever been in history. People are buying or trying to buy or visiting the website, or I have the sound off so it won't interrupt us. So I don't know what the actual argument was, but I'm looking at that going, I know for a fact that that's not going to be here a year from now. That's not going to be here a year from now. But everybody wants to buy it now. Why is that? I personally think that the biggest, strongest indicator that the market is near a near-term top, it may not be the top, but it could be a top for a 10 or a 15% correction. That's really likely. If it's a top for that kind of a move, you could be absolutely right about being bullish 2 years from now and get your ass kicked in the next 6 to 9 months. You know, so I personally think you don't need to know what the market's going to do. No one needs to know. What you need to do is look at the signs and clues that say there's nobody left to buy it. And whatever the fundamentals are, they're going to be wonderful. Tax rates are going to come down. People are going to have more money in their pocket. Enthusiasm is going to have more jobs, blah, blah, blah. It's just this flavor of, you know, the good news for this time around. And in the long run, that may or may not make a huge difference. But in the short run, which is where your money's involved, I don't think there's anybody left to buy. And since there's nobody left to buy, where can the market go if there's no buy orders coming in? That's right. My argument. That's the reason why I would not be long the stock market.
I hear you, man. I hear you. You made your case forcefully. I like your comment about the dart. I've actually, one of these days when I have spare time, I'm gonna actually create the dart, you know, throw the dart, flip the coin trading system. I think as long as you use a methodical risk control on that, it might outperform most people. Yeah.
Well, you know, I'll tell you what I teach my students, the guys that I mentor and coach. I tell them that everybody already knows everything they need to know to prosper, and making money in this business is not that difficult. The hard part is staying disciplined to cut losses according to the plan. And when you have a winner on, sit on your hands, because every trading system, I don't care what it is, the system is going to have its share of winning trades. And statistically, according to the probability of ruin matrix, which is what I educate people on, you can have 42% winning trades. As long as you take $2 out for every dollar you give back, a 42% system will make money net over 100 trades with a probability of 93%. So why would you?
I use and teach those same tables. I use the one from Professor Najra. Hey, we need to move on to Stefanie.
Sorry, I didn't mean to steal anybody's thunder, but thank you for giving me an extra minute. Thanks.
Yeah. Hey, Stefanie.
Hey.
Over to you. Yeah.
All right. Great stuff, by the way. So just to let you know, there are two major dark pools, and the first one is Barclays, and they have the liquidity cross, and they're really the biggest. These are the people that are controlling the world, Barclays. The second one is Goldman Sachs, Sigma X. And so I keep track of these two dark pools because these are moving the market. So on my screen, you can see is my live Vol Pro software. I've gone back to November 7th, right before the election. And this is what I started to see is I started to see millions and millions of late dark pool buy prints coming in on the SPY, and they always start with 501. That's the dark pool signature, 501,000. It's been going on for years, except this year they changed it to 502. I don't know why. I don't care. Same exact pattern. So this is the very interesting thing is that on November 7th, these trades started coming in at 208.48 on the SPY. But guess what? SPY wasn't trading there. The low of the day was 211.30. Okay, these trades. Now, normally you have to report your trade when you do it that day. And the dark pool allows these guys 3 hours to report a late trade. Now, these were not 3 hours late. These were a day late. And there's a loophole. If Goldman Sachs does a trade from their London desk to their New York desk, they cross that trade. They don't have to report it for 24 hours. I mean, how else are you going to buy millions and millions of shares of the SPY? It can go all the way, look at this, all day long without moving the market up. And that's how we knew the market was going to go up. Now, I don't listen to the news. I don't care what's going on fundamentally. All I do is follow the money. That's it. And it's the dark pool. Most people think you can't see these trades. You just don't have the right software. Charles Schwab has it. Lightspeed has it. Live Vol Pro has it. These are the three big players in the dark pool. Anybody can gain access to this information. I'm not here to sell it to you. I just teach my traders in my room how to trade around it. Now, today, I want to show you what I've been seeing today, because this is pretty cool. They're just starting to come in. Oh, here they are. See how they are 502s? This is my Schwab block trade indicator. All 502,000. Now, the high of the SPY today was 226.78. So guess what, right? These trades were not being done today. These were sell prints from yesterday. There's a 500,000, 1, 2, 3, just 3 so far. Now, usually by the end of the day, we may see 4 or 5 million. When we see massive, and I'm talking 20 million, 30 million, and we see 3 days in a row, I call a correction. And I've been right 11 for 11 times in the past 3.5 years. I'm not psychic. Okay, people think I'm psychic. I am not. All I do is read the dark pool tape. I'm the only person in this industry that teaches this. And this is why I run a live room. We've spotted crazy stuff. 2 days before the Wells Fargo news came out with the fraudulent bank accounts, I spotted a $2.5 million sell print on Wells Fargo at $49 and I think 86 cents. This is a $2.5 million print. We never see that. It brought it to my attention. Every morning I put out a free YouTube video called The Whisper of the Day. And this is my hot topic of the day. And if you go back 2 days before the Wells Fargo news came out, you'll watch the video on my YouTube page, and you'll see how I called it to your attention. Here's the big print. Something's going on. I bought some puts. I didn't know 2 days later that news was going to come out. I don't pay for special research. I don't have connections like that. I don't need any of that. I just follow the tape. Before the Paris attack in Brussels, terrorism, I saw the massive prints on the TVIX, 10 million share lots. I had no idea what it was. We weren't in the middle of a correction. The next day, there was bombing in the Brussels airport. I mean, this is crazy. These are the guys that are moving the market. So these are the levels that I'm going to be watching. I actually have a little dark pool cheat sheet I'm going to show you just from the past couple months. And these are all the massive levels. So back on December 14th, we started to spot the first late dark pool sell prints coming in at 227.73. And this is after the SPY had dropped down and these guys kept coming in 13 million shares. Here's another bigger level that I'm watching today is 226.46. That's so trading today, I'm watching this level. If we close below 226.46, I'm going to get more bearish and more bearish. Recently, they started to buy down here, 223.29. So we had a little correction, and then the market came down, and guess what? I spotted on January 3rd, late buy prints at 223.29 on the SPY. So this is my key level. If the SPY stays above this, that means that computer in the dark pool is still buying the SPY at 223.29. No thinking, that's my level. And if it goes below that, well, guess what? We're going to go to an older dark pool level, 221.64. This is where they were buying back in this area. And so I pretty much trade level to level. Now I do kind of see a little like head and shoulders pattern on this daily chart. So, look, if we break that neckline, then I can see us coming down to 221.64. So I like to use patterns, but most importantly, I use the prints and I don't think, okay? Because nobody knows. I don't know what the dark pool is going to do, but I've been right 11 for 11 on corrections. And it's not because I got lucky. It's not because I know the fundamentals of the market, because I don't. And I don't really care, because the market isn't rational. And the problem is that people try to make it rational. What do you think? What about this news? How come the market's not going up? It's going down. Who cares? So I can show you these huge sell prints that we spotted on Bank of America before, let me just get this up, before the earnings came on. Here, I'm just going to go put up Bank of America. I think this is so important. And I'm going to go to Thursday. So you can see we don't normally get very big. Let me just go to January. We don't normally get very big prints in the middle of the day. Not these guys. And we got 2 million share block trades of the dark pool right here. $22.77, $22.75. So guess what? Soon as we drop below that level today, we went short on Bank of America. And you can see that Bank of America never went above that. And this is, you just got to follow what these big guys are doing. We went straight down. As soon as we broke through it, all right, down we went. So this is pretty much what I do. I do it all day long. I trade live and I teach. I do audio meetings, and I really teach as many traders as I can, because, I only have 2 eyes and I can't see every single print popping up on my block trade indicator. And my traders, we'll call them out all day long. I have about 300 traders in my room right now, and I've trained them. So they're strictly read the tape, follow dark pool. Some of them are really amazing with options. I've learned from them. We all teach each other. It really is a community where we have beginner traders, intermediate, advanced, and I love it. I absolutely love what I do every single day. I love educating.
Cool. Very cool. So I'm gonna show my chart really quick here, and then we got one more round to wrap up. So let me show my chart here, and okay. I'm going to do my entire screen, and I'll whip up my chart. Hopefully you see a chart here that I'm sharing. This is the E-mini S&P 500 futures on a 60-minute chart. I like 60-minute for projecting, kind of in this week's time frame. So obviously off on the left, the chart, there's the big Trump bump, and here's the mess that we've been in, the sideways market. And so I'm just going to zoom in now on current price action. And this is really how I use a very simplified version of Elliott wave. There's no Elliott wave structure here. That's a mistake people make, is trying to do a wave count when there isn't one. So I'm just using a little bit of Dow theory here at the moment, right? And Dow theory says, you're in a downtrend, or your trend has changed or begun when you have a series of higher highs, higher lows, higher highs, higher lows going up, lower lows, lower highs, lower lows going down. And so right now we've got a sequence of, some minor lower lows, lower highs, and a bigger low, and going up against a high here. So this pattern, and I also use Ichimoku Cloud, it's broken down through some resistance. My momentum oscillator is showing some pretty good momentum going downward. So I'm watching this, and key levels, you asked about this earlier, Stephanie. If we go take out this previous high here on the E-mini at about 2273.75, right? This pattern's broken. It's probably heading back up. And, I said I had about a 70% confidence level that we're going down. If we continue this pattern, take out this low at 2257.25, take that low out, my confidence goes to about 95 that we're going to continue down, just because I see that pattern, right? Coming out of a channel at the end of a big long rally, and I see some momentum building to the downside here. So that's my quick analysis. Now what I'm going to do is let's close out our final round. We've had a great discussion here. There's 2 questions left. Let's combine them, and if we could just be courteous to each other and make them pretty quick. The final questions are, there was a special question in the survey. It's like, what do you use to hedge your position? And then the other one is, do you have a pick? What's your favorite trade right now that you would share with the audience? And maybe for some of us, that's an overlap, right? My favorite trade right now is a hedge. So if we could just share that again, maybe take about 2 minutes each, 2 to 3 minutes, run through how do you hedge your portfolio or your positions, and what's your favorite trade right now? And we'll kick that off with Fausto.
I thought you forgot about me. You guys been talking like crazy. I'm sitting here just trading, but I'm going to tell you what I kind of like and how to hedge myself. Well, first of all, best way to kind of hedge yourself is that it depends on the profit. As a day trader, you never hold an overnight position. If you're not, then you're a swing trader. And if it's not done into design, that's why most people, I would say it used to be 70%, but it's about, we've done a survey with our staff here, and we've done our research. It's almost a 90% failure rate. When you start combining and start, being a little too diversified, stick what you know, and that's how you become, stick what you know regarding if you want to day trade, you day trade. You don't mix your swing tradings or your options tradings or your forex trading. It's good to know all those different things. So hedging yourself, unless you're in a really bad position, one thing that I was taught when I first started is that if the way you hedge yourself is basically, sell an option on the item that you're in. If you're really in a bad situation, or if you're really concerned that you're overextended yourself, then you trade options. Listen, and another thing regarding about and I've been on the panels for over 20 years regarding about options trading, and options only really became really big after the day trading rule kicked in back in 2000. So and that's why and I don't know if you guys know this, 90% of options expire worthless. So who's actually making the money? The person that's selling the option. So that's a good way to hedge yourself if you feel like you're in a really bad position. Something that we teach at Cyber Trading University, we show how to hedge yourself with the options. I love options, but honestly, I tell anyone, if you're not making over $250,000 or $500,000 a year in day trading, do not trade options. You're going to end up being a poor man playing a rich man's game. One of the picks that I would look at regarding about what's going on in the market, well, we've been doing, for some, you remember the last time I was on, regarding the Trump effect, we did really good with all the shipping companies. Dryer was unbelievable, and Ship, EC, all those were all Trump effects. Dryers, you could see, went from like $4 to 120. That was probably our best 2016 day trading that we had. A couple of other ones that were really doing well, and one of the things I'll be focused on, I don't know if you saw the ETRM trade, a pharmaceutical stock that went from like 2 to like 32. It's been a good day trade. People try to swing trade and just got crushed on it. Now, what I would probably say moving forward regarding about, focusing on what's going on with the new election, because you're having totally two different mentalities of presidencies. Obama was the best salesperson for the Second Amendment. And, and we did great with all the gun stocks with Ruger and Smith & Wesson. And he was big for social medicine. And sure enough, all the healthcare stocks took off. So we did great with those. We're up about 1,000% since he took office. Now they're getting crushed. So I would be focused on the pharmaceutical stocks. Pfizer, we're keeping an eye on. All the pharmaceutical stocks, VRX, any new drugs, because I think the little drug companies, we specialize here at Cybertrade University more in the drug companies because they've been the most volatile and the easiest ones to trade. There's a lot of very inexpensive ones that have been out there. And I think the big ones are probably going to take a hit because they factored in regarding what happened in the past. So that's where I'd be a little concerned if I was you. If you have any positions out there as a swing trader, once again, regarding about position trading and swing trading, if you can't be a good day trader, you'll never, ever be a good swing trader or an options trader. It all starts from day trading. So you'll see it over the course of the day on those positions. So keep an eye on those. And also one last stock they're also pretty big on. A lot of the car stocks, we're really big on Ferrari, Fiat, Ford, Chrysler. A lot of those stocks are doing pretty well. And obviously, you probably heard also what happened this morning with the big car stocks. You saw what happened with BMW. BMW's taking a hit because Trump said he's going to do a big tax because he's opening up in Mexico. So that's also been a great, probably a good leap trade to do. But that's where we're at. Right. And until next time, we'll see how it goes.
All right, good. Lots of good ideas there, Fausto. And we're gonna run over just a little bit, but this is good stuff. We'll try and rein it in. Simon, if you could, real quickly.
Hi, Dean. I'll keep it short and straight to the point. Hedging your position. The way we trade, we don't. Every trade we take, we know ahead of time what we're willing to risk on it. So there's no need to hedge in that respect. So you know what your reward is, you know what your risk is ahead of time, what your money risk amount is, and if it reaches that, you close the trades. There's no need to hedge it. You don't want to ever get yourself, when you're swing trading or day trading, into a situation where you actually need to hedge. Maybe if you're holding a portfolio for long term, that's different. But if you're day trading or swing trading, you don't want to ever get yourself in a situation where you're like, down more than what you want to risk on a position. I mean, sometimes it happens, there's slippage and sometimes there's gaps, but you don't really want to get yourself into that situation ahead of time.
Totally stole my answer, Simon. Totally stole my answer.
Sorry about that. So just know what your reward to risk is, and if it hits that, and you have a losing trade, then just get out and walk on and move on to the next trade. So that's my answer to hedging. Regarding what trade to look at, if you look at gold's been a nice runner now for the past few weeks. The past 1, 2, 3, we're the fourth week of moving up, and it's very interesting on the bigger time frames here. Potential on this, if we go above, well, the next stopping point on here is around the 1250 area. If we continue moving higher, then it's around the 1300 area. If we move above this area, around there's potential to move up to the 1600 area. So golds have been a very, very good, look, this is a nice one to trade, and you should be long gold. I wouldn't take a long position right now because we're just reaching a supply zone in the market. I was talking with Stefanie earlier, it's you want to get in at the beginning down here. When the trend changes, this is a downtrend here, the downtrend changes over here, it fails to go down and turns to the upside. This is where you want to be looking on the long side and riding this move up.
Right.
So that's my trading idea.
Very good. Gold. Yeah.
Gold.
We were trading GDX earlier. Very nice. I got to keep it rolling here.
Oh, one more thing before we go. One very similar thing to gold. If we look at here, take a look at this. It looks very similar. This is the yen futures. Now another one. This is on its way up as well from this demand area here. So all the yen pairs having big moves to the downside, like the dollar yen, the euro yen, and the yen's having a move to the upside, which is very interesting. Very similar to gold.
That looks like it's early in that move.
Yep, it's not a bad, not a bad run so far. Anyway, that's it.
Hey, thanks, Simon, very much. Hey, Jason, hedging and your best trade right now.
Well, I have to agree with Simon about hedging. Is that take your risk on the trade, you don't hedge. But I do something a little different than most traders. Is that I have a long only account and a short only account, and I have proprietary signals that I've developed over my 30 plus years of trading. And there are times when I'll get a buy signal in a currency or futures, and I'll put that in my buy only or my long only account with a risk of 1.5% on my equity. And the same product might have a sell signal at some later time. I'll put the sell trade on the short only account and the same 1.5% risk. So over a period of time, half the trades work, half the trades lose. I'm always risking 1.5% on my equity, but the ones that work on one side or the other, I hold indefinitely, and I just roll a lock profit stop until I'm taken out on a correction, if I'm taken out on a correction. And net over time, I'm always in the market, either long or short, the same product, and I'm always taking money out of the winning side that's more than I'm giving back on the losing side. So that approach, some people consider hedging. I don't consider it hedging because I don't know what the market's going to do, and I don't need to have an opinion on what it's going to do. All I know is that if it's overextended to the upside, it's likely that the buyers are running out. You want to go short. So if I get a signal to sell, if I'm still in that trade 6 weeks later because it's working for hundreds of points, then that's what I'm doing. If I get buy signals along the way, I'll take them. If I lose a point or 2 or 3 or whatever it is, and I lose 1.5 points on my equity, what I'm earning is more than what I'm giving back. So net, I'm usually growing every few weeks to every month. I'm in a new high in equity. So I don't really hedge. What I do is I work both sides of the market independently, and I have 2 separate accounts for that, one for long only trades and one for short only trades. Then for my point of view on the next best thing, the gorilla on the coffee table trade, I really think, like I said, we can't really predict more than just a few days ahead what's likely, and we don't know what's going to be drawn in to the market on a price change. We get more buyers come in on dips than sellers, and you get a correction that reaches for a new high. We don't know what's going to happen till it happens. But there's one strong fundamental that could develop once Trump takes office that I think is really needs to be on everybody's radar, and that's the issue of repatriation of the dollar. If he cuts the price that you got to pay, if you got trillions of dollars overseas and you can bring that money home for reinvestment, new hires, and growth, eventually that's going to drop to your bottom line as a stock growth. But initially, that's a lot of selling of foreign currency and buying of dollars to bring it home. And I think the whole issue of a stronger dollar and rising stock market, lowering taxes, all of that, I think we're going to get a period of time where the dollar continues to firm and foreign currencies move net lower as money is repatriated back to the United States. And I think that is a strong enough fundamental that it could affect long-term view of the dollar. Right now, I can tell you I'm on both sides of the market, so I don't really know, as like anyone, I don't know what the market's going to do. But I do like the idea of cut in the corporate tax rate in an amnesty for confiscating profits held overseas. I think if that's able to pass through Congress and becomes law, then you're going to get a lot of money come back into the United States, and it's eventually going to get put into stock price. So you're going to get a rising market with a rising dollar. I think that is very likely. But for right now, if you put a gun to my head and said, what would you do, to make money by the end of the week, I'd look to be on the sell side of the British pound through Friday. But that's me. I'd be buying dips in the pound.
That's pretty specific. All right, thanks, Jason. All right, Stefanie, hedging and your favorite pick.
Okay, so the last time I was here, my favorite pick was Apple. Absolutely loved Apple because I spotted 15 million dark pool buy prints back here in November. Okay, and I gave you a level. There's always a level. My level was 112. We needed to close above that level because I spotted some selling that was coming in here. So as soon as we broke above it back in the beginning of December, my target, it just got hit actually today. It hit the 120 today. So that was a fantastic trade just based on the prints. Now, you always know what your risk is. It's so easy to buy some really cheap Apple calls. Again, I like to do lottery ticket trades when I'm expecting a big move. I buy them for like 20 cents, sometimes 6 cents, and they go up 200,000%, when you have a big run. In fact, I just finished a new workshop called Trading Options with the sharks in the dark pool, where I show you live examples of my real trades that I've taken over the past couple of months just using it. I have a couple of Apple trades in there as well. Now, right now, if you listen to my whisper this morning, still, again, actually every single day for the past 2 weeks, I've been bullish on gold, loving the gold. Look at the gold print that just popped in today. I'm going to show you this. This is amazing on GDX. A 1.4 million share buy print at $23.20. So, going to draw my line on the chart, and I'm going to be bullish above. That's going to be my level today. Now, as far as the futures, my next target, which I did call out in my video this morning, 1250. That's my next. So I just go from one level to the next on that. Also have my eye on natural gas. Okay, natural gas is a nice rounded bottom formation. And a lot of really nice volume been coming in, but there's always a level. So UNG is a great natural gas ETF stock to play, but it's always the level. My first trade was to 860 that I took based on a Gap Island reversal trade that appeared at the bottom, which is a pretty rare pattern. When you see it at the bottom where it gaps down and gaps up, that's a very bullish sign. But they always take it right to the gap on the chart, which was 860. They fake it out, pull it down, and now I'm waiting for the next trade up above 860. If she could break above 860, I'm going to jump in pretty big on the long side there. And of course, like I just showed you before, bank stocks. Bank stocks are really crucial. I'm bearish on those levels. Bank of America, $22.75. Morgan Stanley, I'm still short after spotting them selling it pre-market. And copper, got my eye on FCX. That's another one. But today we spotted a sell print at 1533, actually the high of the day, about a 300,000 share print this morning. So I'd like it to break above and make a new high, and I'll definitely be swinging this. I actually have a high-end target. You see this bull flag? Yes, this is a very popular pattern, and it has a massive flag pull. So I'd love to take this trade all the way up to about that 1920 level, but of course it has to break above those buy prints. So that's what I'm watching right now. This is what I'm trading.
All right, great. Thanks, Stefanie. And I'm going to wrap it up here. So I agree with the other two comments, both Simon and Jason, regarding risk control, and that is, regarding hedging. So I don't hedge, I use risk control, right? And I do that based on the risk of ruin tables, and I determine my position from my stop first minus my entry, and I use a 2% of my account. So I never have 2% of my account at risk on any given trade more. If I hit my stop, I'm out. That's my risk control. That I don't hedge, right? So I agree with those comments. I've got a trade up on my chart right now. This is US steel on a 60-minute chart. It ran up with the Trump bump, and trees don't grow to the sky, and big rallies almost always, a high percent of the time, correct when they show evidence of it. This one's got clear evidence of a corrective wave beginning down to a Fibonacci retracement zone of 38.2 to 61.8. That'll take us down to a midpoint of about $28 from 32. We're in this thing, we're shorted. It's a great way to trade with just going long the puts and probably about a one week trade, U.S. steel down short. So that's I got a stop at 37.17. Entry right now is good at 32.42. A target right at $28. So that's my my trade of the day here. I like gold too. We've been long gold, making good money on it, and I'm watching the banks really close. I think they're all J.P. Morgan, Goldman Sachs, Bank of America, Citibank. They're all about due to roll over and take a little correction from the. Watching all those closely too. Well, hey, we're over time. It's been a great discussion, and I think I'm going to roll it back to you, David, and wrap it up and take us home.
Yeah, we're a bit over time, but do you all want to do a quick closing statement about your site and how people can get in touch with you?
Yep.
All right. So okay? We'll make the time. Okay, Fausto, give your 20-second pitch, man.
20-second pitch. Well, thanks again for having me here again. It's been a wonderful year so far. To find out more about TimingResearch, just visit ctu.co. We've been in business for over 22 years. Can't go, when you have somebody around that long, there's obviously has to speak for itself. So to find out reason why, come and join our trading room. Come see a couple of events. We actually have a big event that's coming up. Just let everybody know in Miami. For anyone who wants to know more about it, we teamed up with the NFL. We're going to be teaching hundreds of NFL players that want to learn how to trade the market. Listen, everyone in the industry wants to start taking matters in their own hands. If you want to know more about it, we have one also here in New York that's coming up in April, working with the NFL. So, if you want to be able to learn how to trade and team up with a couple of players and join with them, feel free to come visit our site, and we'll be happy to get you signed up.
All right, thanks, Fausto. Simon, your elevator speech for us, man. Just closing message for you.
Hey, Simon, I think you're muted.
Okay, yes. Can you hear me now?
Yeah, there you go.
Sounds good.
Okay, thank you. Thanks, Dean. Okay, so if you want to learn more, you can go to my website, tradesmartforex.com. Tomorrow at 1 p.m. Eastern time, if you go here, you can actually sign up. I'm doing a live webinar of how to build a profitable trading strategy step by step. We're actually going to build one from the ground up, and we're going to trade it live. So here's a page for this. You can actually go to this page and register. And around the same time we started today with the timing research, there's a webinar I'm giving tomorrow. So feel free to sign up for that. That's probably the best step for learning a bit more about what we do or what I do. And you'll probably learn a lot of useful information on this webinar about how to actually go about building a strategy that works.
Okay, super. Thank you, Simon. Jason, any closing comments?
No, thanks. I just wanted to say appreciate you having me on again. And Dean, it's been great to work with you and the other guests. Thank you so much. And David, I'm always around if you'd like to put me on another show. Like I said, I just trade my own money right now, and my website is open, but all you can do is join my mailing list. So if you're interested in learning more about me or staying in touch over time, feel free. That's theliononline.com. But like I said, I'm not looking for new business right now. I'm in the process of trading my own money. I think we got some great opportunities coming, and I really appreciate the comments that you guys have had on with these commenters. Some great stuff. And Stefanie, for you to put up their natural gas, boy, I was really trying to pick a winner, and I really appreciate your point of view on natural gas as well too. So I think that's something the clients really need to look into a little more. But thanks again for having me, guys.
All right, good. Glad you were here, man. Stefanie, you want to wrap it up?
Okay, here's my website. Just go to www.thestockwhisper.com. The light box will pop up. If you put your email in there, you'll be put on my Whisper of the Day YouTube video. I send it out every morning before the market opens. I have a 93% success rate. This is my hottest day trading stock pick. A lot of times it's swing trades. There's always a level. I'm always showing you dark pool action, and it's free. So you can come and sign that up. If you want to actually see me trade it live, you can come into my online trading room. I show my screen just like I showed you today with all the dark pool activity. And it's only $9.95 for 30 days. You try it out. You're either going to love it Or you can say, hey, it's not for me, and don't worry, I don't have any salespeople. Nobody's going to push you into anything. People come and they want to stay because they love it and they learn from it. And so it's my pleasure. Thank you for having me up on your show today. Great.
Hey, thanks for being here. It's great to be on the panel with you, Stefanie. And again, I'm Dean Jenkins of Follow Me Trades. And my connection is really bad today, so I'm just barely able to get audio and video. So real easy URL though, followmetrades.com. You can go there, check it out, read about the services, and I invite you to check out my live trading room. It's $39 a month, and a lot of education there, and we analyze the market, call out some good picks. And we've also got an active trader community. We've got a closed Facebook group where people trade ideas, and you get to join that as part of the live trading room. So hope to see you around there. And again, now back to you, David. Thanks for having me here to moderate again. It's always good fun, and a lot of really good discussion and content here today. So,
all right. Yeah, thanks everyone. Great
I
show.
learned a lot. Yeah.
Yeah, great show. So for everyone watching, just a reminder, be sure to hit the YouTube subscribe button if you haven't yet, so be sure to get updates on future shows. Also, you can go to TimingResearch.com, download any of the past reports, or view any of the past shows there. Be sure to join us next week. We're going to be on Monday again next week, January 23rd. Vince Vora, Michael Filagera, Gary Dean, Steve Lentz, and Matt Buckley will be on for that show. And so I just want to thank everyone again for this show. Fausto Pugliese of cybertradinguniversity.com, Simon Klein of tradesmartforex.com, Jason Jankovsky of theliononline.com, Stefanie Kammerman of thestockwhisperer.com, and Dean Jenkins of followmetrades.com. Thanks, everyone.
Thanks.
Thank you.